The leader of the world's most dangerous cartel is dead. While the headlines are focused on the violence, the real earthquake is hitting Wall Street. With the USMCA trade deal up for review and the border in chaos, your investments are in the crosshairs. Today, I'm showing you the 3 ways this conflict is reshaping US finance and the specific steps you can take to profit from the volatility. When the world's most important trade route breaks, the market doesn't just stop, it recalibrates. Mexico is now the U.S.'s #1 trading partner, but in Jalisco and Sinaloa, cartel blockades have turned just-in-time delivery into just-in-case survival. For most, this is a crisis, but for the strategic investor, this friction is creating a multi-billion-dollar secondary economy. You want to know where the money is? Look at the companies fixing the holes the cartels are tearing over. On February 20th, 2026, the Supreme Court delivered a massive blow to the administration, ruling that broad universal tariffs under the Emergency Economic Powers Act were unconstitutional. For a moment, the markets exhaled, but that exhale was short-lived. By February 24th, the White House pivoted. They're no longer using emergency powers, they're using national security. To target the cartel-riddled supply chains of Jalisco and Sinaloa, private security and tech. With cargo theft and blockades at record highs, standard shifting is dead. Money is flowing into secure logistics. Companies like Grupo Traxión and international firms providing armoured transport, AI-driven geofencing, and real-time satellite tracking are seeing 20% year-over-year growth. In 2026, a truck isn't just a vehicle, it's a mobile fortress. The violence in the South is pushing manufacturing even closer to the border. Industrial REITs, focusing on twin-shoring hubs like Laredo, McAllen, and El Paso, are hitting record occupancy. Investors are moving away from deep interior Mexican plants and pouring capital into borderside warehouses where goods can be staged and protected the moment they cross. Sinaloa and Jalisco are rich in silver and gold. As cartels extort mines, supply becomes volatile. The administration is now deploying a 10 to 15% national security duty on non-compliant goods. If a Mexican manufacturer cannot prove their logistics routes are free of cartel influence or blockade taxing, they get hit with the tariff. It's a compliance or consequence model. Goods moving through Jalisco and Sinaloa, hubs for medical tech and auto parts, are being flagged as security risks. Cartel control of those roads constitutes a foreign threat to American commerce. This isn't just a tax, it's a filter. It's designed to force Mexican industry to choose, cooperate with U.S. security standards, or be priced out of the American market. So, where is the money? It's in compliance as a service. The winners are the Clean Path logistics firms. These are companies that provide end-to-end audited and U.S. verified transportation. If you can move a cargo of sensors from Guadalajara to Laredo and guarantee it's cartel-free through biometric tracking and private security, you save the importer 15% in duties. Investors are pouring capital into blockchain-enabled supply chains. By proving the provenance of path, companies can bypass the 15% duty, creating a massive competitive advantage over those stuck on dirty roads. The Supreme Court closed one door, but the administration opened a more surgical one. In 2026, national security is the new trade barrier. In the battle between the White House and the cartels, the biggest returns go to the ones who build the clean bridge. But U.S. giants like Ford, GM, and Walmart have bet billions on Mexico, but when the currency swings 5% in a single day, profit margins don't just shrink, they vanish. Take the automakers. Ford and GM produce up to 30% of their fleet in Mexico. The problem is, they pay their workers in pesos but sell the trucks in dollars. When the peso strengthens unexpectedly, their production costs skyrocket. This is the translation trap. In 2026, the administration's new national security tariffs have turned the peso into a political football. Every time a new blockade is reported in Sinaloa or a new tariff is threatened in D.C., the peso reacts hard.